Back to the Japanese yen. So first off, we see that on Friday we saw some weakness coming into the yen pairs, or literally just the Japanese yen future itself. And if you notice, since the beginning of this year, we've experienced a very strong Japanese yen. Okay, it's been pretty strong. Why? You might ask that because the Bank of Japan has been tightening their monetary policy. They've been tightening their economy by increasing that, by making sure that the inflation rates remain quite high. So that will give them the opportunity to be able to do what, to cut, to hike their rate, okay? Because we know that since December 2025 that they hike rate by 25 basis points, we were looking forward to hike rates maybe once or twice before the end of this year, which is 2025. So now the reality of things right now is that on Wednesday, the Bank of Japan is planning to hold off from hiking rates, which is actually kind of like very surprising to me because I was in my bubble of the first interest rate data that will be coming out from Japan will possibly be 25 basis points hike. But I was quite surprised when I saw that okay, they are not going to do that. So that literally could be the reason why on Friday we saw these three candles actually close bearish. And by Friday, I mean this is Friday, Monday, which is yesterday, and today. And this led to all my yen pairs because most of you that have been following my videos for a while know how heavy I was on the yen pairs. Okay, I was shorting CAD yen, I was shorting Swiss yen, I was shorting Kiwi yen, and I was shorting dollar yen. Every single one of them. Mind you, I've made some significant and decent profits from them because I've been shorting them since February. So I've made serious profit from them. However, I was expecting a more, a more longer term kind of stuff, considering where the Japanese yen are economically. However, I kind of got it wrong this time around. Not super, super wrong, but I wasn't expecting them to not to start hiking rates almost immediately. I guess I was in my bubble, which is very much understandable. And secondly, the other thing was I was overly exposed to the yen pairs. I wasn't even considering the dollar pair because it was quite weird. The momentum was too bearish. I was expecting a pullback that is not coming up. So I figured, let me just hold off on the yen pair since the strength is there. Why not just hold off on it? I'm going to show you the economic heat map later. But I want to walk you through the technical aspect so you know where I stand on the yen pair. So this is the Japanese yen futures, okay, which is the currency itself. You can see that it's been very bullish since the beginning of this year, this 2025 January, and you can see it's been very bullish. However, it's not just going up. You can see all the pullbacks, which was quite decent. But when I keep a close tab on this, I've seen a breakout of this particular resistance structure. It is retesting and making use of this particular area as support. Now, the expectation or what my technical analysis is anticipating for, what I'm actually anticipating for, basically on the technical perspective, is to see a further push to the upside, which is very normal for every support and resistance kind of trader, which I am. However, the data, which is the interest rate that I was talking about earlier, kind of like spike or call for this immediate push to the downside, and that led to all of my trade getting turned against me literally. I saw CHFJPY. Actually, this one actually got me tapped out today at the top here. Mind you, I'm still very bearish on all of these pairs, okay? But right now, considering where Japan Swiss yen is right now, I'm not going to take a short right immediately because anything can actually happen right now until the rate is finalized, it's released. I've seen the impact. Possibly on Thursday, that will give me a clearer picture of what to do with the yen pairs moving forward. Okay, the only yen pair I'm currently holding right now is the dollar yen. Okay, and the reason being dollar is extremely weak. Considering this particular structure, this particular candle I have right here, which is paying back, I believe, I believe that there is high possibility to see a further drop in the price of dollar yen. Don't forget what I said earlier. Yen is still pretty stable. Okay, it is not weak. However, the sentiment that surrounds the Bank of Japan interest rate decision, which is them holding off from hiking the rate, could be the reason why we're seeing this in immense weakness from Friday till now. Okay, so that said, I'm still holding up on this dollar yen, whereas I look forward to other pair like WTI, which is crude oil, that I've been shorting since Friday as well, if I'm not mistaken. Yes, since Friday, which looks very decent right now. All right, so those are the two significant trades I have going on right now, as far as I'm concerned. Other pairs are more like a day trading plan because if I take you through the top setup on Edge Finder right now, we have gold, we have euro dollar, we have pound dollar, we have euro Aussie, we have pound Aussie, and we have euro Kiwi. All of these pairs are already straight at the top. There is nothing I can do with gold. I can't start buying from the top. Euro dollar, I can start buying from the top. Pound dollar, I can't buy from the top. Euro Aussie, I counter trend it for a minute. I made some profit and I closed the trade. I'm done with it. Okay, possibly I'll see if I can get another entry on Euro Aussie, but right now I'm not even interested in it. Pound Aussie, I'm actually not interested at all. Euro Kiwi, I'm super not interested. However, I have some plans on dollar Swiss and dollar CAD, but I would love to wait till the FOMC data got released on Wednesday. Then that would help me decide what to do. The plan for the FOMC is to hold off on the inflation rate, on the interest rate, which you can see right here, which is Wednesday. You can see they're trying to hold off on interest rate as well. They're keeping it at 4.5%. I mean, that is very decent. Okay, if that's what they want to do, I would like to see the impact before I jump into this dollar Swiss and dollar CAD trade. But so far, so good. I'm still holding USD JPY. The other reason why I'm still holding on to this trade is because of the fact that it's also listed as bearish on the H finder right here. So it seems to be the only currency that seems very stable. And the pressure that comes from the weakness that we've seen on the yen pairs from Friday to Monday and to the end of the day, which we saw very crazily. It happened quite rapidly on the CAD yen, on the Kiwi yen, and on Swiss yen, as you can see on the chart. But on dollar yen, it's a whole different story because it wasn't that intense. Possibly because dollar is also not very strong. Don't mind you, CAD is not strong, Swiss is not super strong. And which other one is that? Kiwi is definitely not strong, okay? Which I'll be showing you their economic heat map in a few minutes. As a matter of fact, let's talk about it right now before I finalize on the whole thing and I'll wrap up with the dollar Swiss and pound Swiss I'm looking forward to take. Dollar CAD and dollar CAD and dollar Swiss I'm looking forward to trade. All right. If you look at the economic heat map in the United States, right here, these are the actual that we have here. And you can see all of this data, all these numbers looks very decent. Okay, this is still signaling a quite strong economy. Okay, you can see the GDP growth looks very decent. Manufacturing PMI is not bad. Service PMI is not bad. We have a lower than expected retail sales, but it is still high. 0.2% is still very decent compared to where it was coming from, which is negative 0.9. All right, that is still a very fine retail sales number. It is deteriorating, it's slowing down, as you can see, came down by 0.4% from previous. However, from forecast. However, it's still very positive. So I'm going to give it a plus right there. We have a sticky inflation still in the United States. Okay, inflation is not going anywhere. It's still above 2.8%. I mean, still above 2%, which is the mark. Okay, ECB planning to keep the inflation rate at 2%. The Fed also planning to keep the inflation rate at 2%, between 2.5% and 2%. All right, so we have the CPI UNA at 2.8, the PPI at 3.2, and the PCE at 2.6. So inflation is still quite hot, in my personal opinion, and it's very sticky, so it's not going anywhere. So I'm going to give that one maybe a half. And then we have the unemployment rate looks quite decent. The initial jobless claim that came out last week, Thursday, also came quite good. You can see there was a shortage of 5K in the number of people that claim they don't have a job. So in my general view, I'll still give dollar around 70% strength as on the economic perspective. Okay, so on an economic stand, I would say dollar is still pretty strong. Taking a look at the European Union economic heat map right here, you can see this is the actual that we are focusing on, mind you. So you can see right here the GDP is quite terrible, 0.2, not cool. Manufacturing PMI not cool. Service PMI is quite decent in a way. Retail sales is below positive. It's actually negative. That is very bad. Where they have a sticky, very close to target CPI, which is quite decent. That's why they kept on doing what they kept on cutting their rates, because they have a very serious curve on the inflation part of the economy. So it seems to be deteriorating, it seems to be cooling down, and that gives them the opportunity to be cutting. However, it's the opposite for Japan and for the United States, because they have to make sure that they've seen a very serious impact, or they have to see that the inflation is actually slowing down before they can start cutting rates, or before Japan, which is actually different for Japan, because in Japan, Bank of Japan really want to see a higher inflation rate so they can start hiking their own rate. But it's a whole different story on that aspect. So PPI seems to be cooling down as well at 1.8, which is not quite bad. However, it came higher than expected, which is very good for the currency. Anyways, okay, unemployment rate is not good at all, and the employment change is also quite not interesting. So I will give them, give or take, 45% economic strength. Okay, you can see, okay, not because the economy is strong, you can see what you have right here. It is not super strong, but the bill actually saved them, okay, for the past couple of weeks now, and that is why it stays at the top right now. I will advise you not to go against it right now, okay. focus on the economy. Let's wait to see some pullbacks on the euro dollar pairs. On the euro pairs, then we can start looking for potential trade opportunity. Maybe buy, maybe sell. I'm not sure yet. Okay, but right now, I would say 45% economic strength for the European Union. And right here we have the Canadian dollar as a currency itself. You can see right here everything looks quite bad. 0.2% for GDP growth is slowing down. It's not good. Manufacturing PMI is terrible. Retail sales look quite decent. Inflation is also quite decent. PPI is too hot. Unemployment rate is overeating. The labor market is overeating in Canada. And you can see I'll give them 40% strength as well. Okay, they are neutral bearish to me in Canada and EU. Okay, neutral to bearish, nothing super serious right here. So that is just what we have. You can see that this currency, the Canadian yen, I mean, the CAD yen, the euro yen, and then we're going to talk about this is the Kiwi yen also, that also got pumped up this week, literally. It's not because this currency was actually strong, it's simply because yen was weak. That is the only reason. However, my mistake was I was in too deep on the yen price. Okay, I was overly exposed. And the other thing was the fact that I mean, that's more like it. Anyways, I made some very good profit for me because I was able to get out, get in, get out, get in, get out, get in so many times while I was running the trade, because the trade range, all the pairs actually ranged for like 3 weeks where I was just getting tapped out a small profit. Okay, before the whole thing now went back up. So if you aggregate everything, I will see very much in very decent profit, not too much profit, but decent profit. But at the end of the day, it wasn't as I expected. Now, taking a look at the Japanese yen economic heat map right here, you can see 0.6 GDP growth. The GDP growth is actually also cooling down. It's not as hot as anyone would have expected. 0.6% is not super good. The manufacturing PMI seems decent, 49 points, but it's still below 50, so that's not good. But however, it is higher than expected, which can also be taken as a positive. Can be taken as a positive sentiment compared to if it was lower than expected. The service PMI was pretty good, above 50, and the retail sales 3.9, super good. Inflation was now or the CPI, PPI, and PCE. All of them are looking quite hot, which is very good for the currency because they want to act. So this is good. Unemployment rate 2.5, not too hot, not too cold, seems normal. I like that. Employed people also looks quite good. So I would give this 75% strength as well. Like I said earlier, yen is not weak. It's just the Bank of Japan sentiment impact. Okay, people, the institution were just up. Let's just say maybe retail sales, or maybe just the institution, just probably some guys like closing on their buying trade to see if they can trap some retail sales into a short position before they drag yen back to the upside. This is sentiment, okay, what I'm saying right now. There's no actual fact to that. It's just me thinking thinking with my mind or whatever. But at the end of the day, based on what I have right here, I see a quite a strong, or let me say a persistently strong economy for the Japanese yen. So I would like to see how this goes before the end of the month. Okay, as a swing trader, I don't think about now. I don't think about the next 2 days. I think about the next couple of days, couple of weeks. Because when you trade the fundamental, it gives you the opportunity to stretch your mind to see the market in a full front for what it is. Okay, so that is that on that. Now going back to the last stop, which is the the Kiwi economic heat map, which is the New Zealand economic heat map. So right here we have a negative growth in New Zealand as far as the GDP is concerned. We have the manufacturing PMI seems very stable, so that's good. All right, we have a flat service PMI. Okay, it's not recorded. Retail sales is above negative 0.9, looks quite decent. We have inflation that the CPI inflation looks quite decent as well. However, the PPI is deflated. Okay, you can see they're going deflated on that one, which is not super good. Unemployment rate is pretty hot, 5.1, considering the level of manufacturers. Okay, the level of the inflation being exerted on the manufacturer. So it's more like they are working for free over there. Their product is more like for free. The negative 0.1% on inflation on the PPI is not super good for the economy at all. All right, it won't give opportunity for people to work. Number one, it also won't give avenue for the producer to also make decent profits. Okay, that's more like the way I'm able to interpret that. That might be wrong. Okay, it's time to be corrected. So unemployment rate is also very terrible. So I would give them roughly 45% strength as well. And this 45% is coming from the very moderate inflation, the retail sales, and the manufacturing PMI. The rest of it is actually nothing to write all about. So that is that on Kiwi. So I would still say it's not super weak, but it is not strong as well. Not as strong as the like of dollar or the like of yen, in my own personal opinion, and based on the data I have right in front of me. So that said, this is the reason why I'm still bent on shorting the likes of Kiwi yen. Okay, I'm still bent on shorting the likes of Swiss yen and CAD yen as time goes on. Well, am I going to jump into all of this now? Definitely not. Am I going to open all of them at the same time the way I did last time? Definitely not. I'll possibly open maybe one or two. Kiwi yen will probably be one of them, because you can see this is a very, very decent pullback from the yen. Okay, from the yen. You can see it came all the way back to 61.8% Fibonacci, which is very decent. So I'll possibly right here look for an engulfing. You can see we already have a pin bar candle right there. On the day, this is the daily time frame, don't forget. We have a pin bar right there. I will look for a candle that closed below here, and I will give it a shot. I'll give it a shot, possibly maybe on the 8-hour time frame or the 4-hour time frame on this one. So before I give it a shot, and if I'm going to take this, I'll probably just stick to my dollar yen and Kiwi yen and hold off on it. If I'm going to open any of it, you can see we have almost the same thing right here. So you can see we have a pin bar right there. And if I see another candle that closes below here, then if you also see, look for this on the financial advice, right? If you also see the same thing, you can do what you can go ahead and give it a shot. Don't forget that. So this looks quite decent if you're looking to short all these currencies. Okay. CAD yen, I'm very sure we should be seeing almost the same thing. Exactly. You can actually have more like a dragonfly right there, or a gravestone candlestick pattern. We don't really have any body right here for this particular candle. Let me enlarge it so you can see what I'm talking about. You can see yesterday candle closed pretty flat. Okay. It's not the hyper, it's not the serious pin bar that we always look for. This is more like a gravestone candlestick pattern. It has a very tight body. Okay, very, very, very small body right there. However, if I see another one, a candle that closed below there, very decent and very red, okay, I will consider shorting. My stop loss is going to be above here for sure, and I will target the bottom, but the exact same plan I've always had. All right, but this one I would be very, very careful, because when you look at the card economic heat map again, okay, you see that card, considering what we have right here, the economy is quite weak. Okay, we don't really have much to write all about, but the card impact, okay, 66.67 right here based on the economic based on Edgefinder report right there. Well, if I'm gonna go by these, okay, by the data I have right here, I would say the economy is not super strong and it's not enticing. All right, so that is that. But when you look at the yen economy, this is looking pretty decent. Okay, 0.6 GDP, 49 points for manufacturing PMI, 53.9 for service PMI. Retail sales is quite decent. Inflation is pretty hot and sticky. That is very good for the currency. Okay, we have PCE 0.8 above negative, quite low compared to the previous, where it's above negative, which is quite decent as well. We have unemployment rate is cooling down, not too hot, not too cold, and they have a big labor market, meaning people are really employed. So I've said this again, I've said this before. This is very decent. Okay, very, very decent. So the currency is strong. It's 7.14. The stock market, the maybe Nikkei or Russell is also pretty strong. Okay, so this is very, very good when it comes to the economy. All right. So that said, I would say that you can look into this, but make sure the entry is properly formed, because by the time Bank of Japan will be releasing their interest rates, definitely if it comes just as forecasted, we'll likely see just a pump and dump kind of move. But if it comes lower than expected, we possibly see this actually spiral to the upside with a very delicate candle, something that looks like this. Okay, and if it's lower than if they actually accurate, we'll probably see a very spiky move to the downside. That is not something I would love. Also, the fact that I'm looking forward to take short on all of this trade, but it will actually make sense because I'm already holding a short trade on dollar yen, as you can see right there. So lastly, let's take a look at the USD CHF. What is my plan on USD CHF? All right. So when I talk about USD CHF, guys, don't forget, if you're watching this video on TikTok or on LinkedIn, or you're watching this on Instagram, don't forget the full version of this video is on my YouTube channel. Okay, it's being posted on my YouTube channel, so you can rush there. You can give me a subscribe. You can like the video if it's helpful to you, and if you like what you have seen so far. Okay, you can give me a like. This is the YouTube channel I'm talking about. All right, give me a like, subscribe to the channel, and just make sure you support the channel one way or another. All right, so moving forward, and don't forget to like this video also wherever you're watching it from. Moving on, USD CHF, I would for me, don't forget, when we're talking about the top setup earlier on, we said we have USDHF right here looks quite bearish, right here, -5. USD card also very bearish, -5. Dollar yen looks very bearish as well. I mean, it looks bearish, -6. Okay, none of it is very bearish. We don't have very bearish and very bullish this time around. All we had is just bearish and bullish, which is quite decent. Okay, considering the fact that most of these pairs are already pulling back, they are correcting, the trend is changing. So this is very normal. Moving forward to where I was before I came back here. So as far as dollar swing is concerned, two things, right? It's either I see a very nice and decent pullback back to 50%, so I can take a much better shot around this zone right here, or I wait to see the market to come all the way down here, pull back, make a very deep pullback, all right, possibly come back to this particular structure and then start falling down. Okay, don't forget two ways: pull back to 50% back to the zone before it starts short, before it start going down, or maybe it's going to come all the way down further, then pull back deeper, then I will take a shot. All right, two ways. Don't forget, those are the two things that I'll be looking forward to take on dollar Swiss. Dollar card at the same time, I'm also looking to short dollar card based on what has been forecasted, what's been advised on Edge Finder top setup. Okay, you can see right here, dollar card seems to be ranging, and I don't really disagree with this. Okay, dollar has been quite stable, card has been quite stable. All right, economically, and with all the trade war between the trade tension, let me say tension, not actually the war. Considering the trade tension between Canada and dollar and the United States right now, I think this is also not overly stretched. Okay. However, after an accumulation phase like this, you all know what happens. Either we get a decline that will be very sporadic and fast, or we get a more advanced move. Okay, that will also be very sporadic and fast. So this is more like a break and retest kind of trade for me as far as dollar card is concerned. But if you're asking me, where would I be considered to go? Will I be taking a buy or will I be taking a sell? First of all, I will considering a short. Why? Because dollar is pretty weak. Okay, we've talked about that. I mean, technically, dollar is weak considering what DXY is being printed. But when you look at the economy, do I want to short dollar? Considering them having such a very gigantic economy that they have right now, a very strong GDP, okay, a very strong GDP, service and manufacturing PMI looks decent. Retail sales below is 0.2, not super good, but it's better than previous. CPI, PPI, PCE all look sweet. Unemployment rate is cool and calm. Initial jobless claim looks very good. Job opening looks very good. ADP is not too crazy. Non-farm payroll was quite shorter than expected. Shorter than forecast last month, which is not super good. But at the same time, the job data literally is cooling down. All right. But at the same time, unemployment rate is not too hot. So I would say overall we have a very decent economy in the United States. So this is not worthy of me going on a full-blown shot on dollar. All right. But that said, this technical analysis, this chart is saying a whole different thing, and I don't like it. Okay. So for me, the pullback is still needed for me to even consider taking a possible short on dollar at all. But we see how this goes in the next couple of days. Okay. So that is where I stand right now. There is no serious move in the market right now. Everything seems to be cooling down. But we all know that this doesn't last for long. Okay, at some point, the market, no matter how long it goes down, no matter how long it's going to be flying to the upside, it's going to cool down at some point, and we're going to get some very decent entry. Okay, later. So I'm looking forward to that. I'm a very patient trader, patient and watch how this goes in general, and I will keep you guys all updated on how it goes. So on that note, I will see you in the next one. Don't forget to subscribe to my YouTube channel. Don't forget to follow me on all my socials. Don't forget, this video is just a snippet of a full-blown analysis that is always posted on YouTube. And if you're watching this on YouTube, don't forget to subscribe. Don't forget to like the video. It's going to help me a ton. So have a good day. Bye for now.